Hello students, welcome to BYJU'S IAS. In today's live session, let's have a discussion related to some important economic related events that have taken place from 17th to 23rd July 2021. Now the first article is related to concept of GEM. Now GEM basically stands for Government E-Marketplace. Is it okay? It's an acronym. It stands for Government E-Marketplace. Now government generally, rather than using government, you can simply say the ministries, the department, or even the central public sector enterprises many of the times are trading goods as well as services. For example, a department within the ministry itself would require, let's say, air conditioning, would require certain human resources, would require water supply, would require supply of projectors, etc. These are referred to as common goods as well as services. Now whenever these kinds of common goods and services have to be purchased, rather than following a tendering process, that is a full process where the tenders are called, companies will have to give a tender, and there is a lengthy process. There were two different groups of secretaries which recommended to Government of India that we must set up a very transparent process for the acquisition or the purchase of these kinds of common goods and services. And many of the times it is so happens that the trade, that is the selling and buying of these particular goods as well as services, is happening between one government entity with another government entity. So the government entities are buyers in many of the transactions, are sellers in many of the transactions. So in order to have a very transparent process, Government of India in the year 2016 basically set up this particular concept of a Government E-Marketplace. Now what is this Government E-Marketplace? Rather than using the full form now, I will simply use the short form GEM. This particular Government E-Marketplace is nothing but a portal. Within this particular portal, the sellers are registered, the buyers are also registered. If a buyer wants to purchase a certain sets of common goods or services, he can call for a bid, he can call for a tender process within this particular portal itself. Now the idea with respect to setting up of this particular portal is, as already mentioned, one, we will introduce a transparent process here. There is no middleman, there is no corruption, that will be eliminated. Second, if you are a company which wants to sell certain goods and services to, let's say, Government of India, first you should be visible in the market. For that, again you will have to incur marketing expenses, advertisement expenses. Right now, this kind of expenses are not required because you can get registered directly on the GEM, there is a GEM, and whenever the government or any department or any ministry, any CPSE or any organization related to government calls for a bid, you can directly bid for selling these particular common goods and services to the government itself. And the time taken, right, compared to earlier system would also be much lower under the concept of a GEM now. With this particular objective, Government of India has set up a GEM, and in the next month itself we are going to complete 5 years of GEM. Now what is given in this particular article? Follow this very carefully. Despite one of the rules of Government of India which was issued in 2017, Government Financial Rule, which was issued in 2017, it basically stated that all the departments of the ministries, all the CPSEs, etc. must be registered on the GEM. This particular the provision basically stated, or it mandated, that the government entities or government owned entities, right, the departments, ministries, etc., all of them should basically be present on the GEM and should be purchasing the goods and services from here, that is common goods and services. And if these are sellers, they should also be registered on this particular portal and be supplying to the government entities. That was the mandate which was issued by the government in 2017. And very recently it has been found that many of these particular CPSEs are even today not yet registered on this particular GEM portal. Now what is the problem with respect to these being not registered on the portal? The problem is, understand this very carefully, on one side government entities could be buyers, is it okay? On one side government entities, CPSE, ministry, so on and so forth, could be buyers. And when you are a buyer, you would always want more suppliers in the market. When there are more suppliers in the market, competition increases. the government entity can decide to purchase at an efficient cost or an efficient price because of this particular competition. On the other hand, imagine you are a government entity which is a seller, because you could be both, right, buyer as well as seller. So if you are a seller, if you participate in this particular market, don't you think you will be getting access to more buyers in the market? So basically on one side, the government entities are losing revenues because there is no sufficient amount of a competition. And when I say losing revenues, I am talking in the context of no sufficient competition because of the absence of some of these particular government entities. And on the other hand, these particular entities are unable to generate revenues by expanding their market, registering on the GEM and selling to other government entities. So very recently, the Department of Public Enterprises, DPE, has basically shot a guideline to all these particular ministries as well as the departments, asking these particular CPSEs, departments, etc. to be registered on the government e-marketplace. This is the gist of the article provided here. Now beyond this, what you should remember is, follow this very carefully, under the government e-marketplace, Government of India has made certain very important changes, and this is in line with the concept of a Make in India, Atmanirbhar Bharat or Self-Reliant India. Now what I am actually referring to, first have a look at this. If you are a seller and you want to basically register your product, it's a new product, you want to register that particular product for sales on the government e-marketplace, then you must simply mention what is the country of origin. Is it okay? Remember this. You should also mention what is the country of origin of this particular product. That's a first very important change here. Second, if you are also selling these particular goods which are listed on this particular GEM, you should also mention what is the percentage of raw materials or how much components out of this particular good are sourced from the domestic market itself. Third very important change, under the Make in India initiative to push Make in India, Government of India says there is a new filter of Make in India. Using that particular filter, you can find out which of the listed products within GEM are actually manufactured in India. And if you want to actually purchase these particular products which will have a domestic component of more than 50%, that is more than 50% of the components used in the manufacturing are sourced from the domestic market, you can use the tab or you can use the filter to filter out other products and purchase these particular products only. So these are certain very important points with respect to government e-marketplace. Now what is the importance from the UPSC exams? One, the directive has been issued or the guideline has been issued by the Department of Public Enterprises, hence this is there in the newspaper. But more importantly, in the coming month, like I have already mentioned, this is going to complete 5 years. That is the precise reason this will become very important for the UPSC exam. Now with respect to how much numbers of sellers and buyers are there in the government e-marketplace, have a look at this. As of the latest information, there are more than 53,000 buyer organizations which are listed. Around 22 lakh sellers are also listed, right? 16,000 categories of products and 175 categories of services are also available for buying and selling on this particular GEM platform as such. So this is a discussion related to article. Now based on this, I have given a question here. Consider the following statements regarding government e-marketplace. First, government e-marketplace was launched in 2016 by the Ministry of Heavy Industries. Statement is wrong. This was launched by Ministry of Commerce. Remember this. Second, it is mandatory for the ministries, departments, CPSEs to procure common use goods and services only through government e-marketplace. Statement is correct. Right. So based on this, the right option will be option B, only 2. Next article, pension funds and IPO. Very recently, the head or the chairman of a PFRDA, Pension Fund Regulatory Development Authority, has stated that in the coming time or in the coming next few days, they are going to allow the pension funds, these are nothing but the financial institutions, they are going to allow the pension funds to invest in the IPO. Now there are two important points here. One, right, what are these particular pension funds and what is this idea of an IPO? And please be very careful with respect to UPSC exam, for a simple reason. In the last 1 or 2 months, if you have been reading the newspaper, there is a lot of discussion that is happening with respect to concept of IPO itself. Now, starting with the basic idea, pension funds. These are the financial institutions which are basically selling the pension related products in the market, and they are gathering these particular or collecting money from the investors, and they are investing in different instruments in the market. Now, as of the present guidelines, are they allowed to invest in the stock market? Yes, they are allowed to invest in the stock market, but there is one condition, right? If it is a pension fund, it is a financial institution such as a pension fund. If they want to invest in a scrips or in a stock market, they are bound by one condition, that is they are allowed to invest in the scrips of only those particular companies whose shares are part of F and O, and which will have a market cap of at least 5,000 crore rupees. Now, again, two technical terms have been introduced. What is F and O? F and O stands for futures and options. And what is the market capitalization? Market capitalization basically is what is the total market value of the shares which are issued by a particular listed company. Any listed company whose shares are available in the stock market, right? So, these particular shares and their present market value will give you the concept of a market capitalization. So, right now pension funds are allowed to invest in the scrip of only those particular companies which will satisfy this particular condition. But if you have seen in the last 1 year itself, and especially in the first 6 months of the current calendar year, that is 2021, there are around 22 companies in case of India which have gone for IPO. Now, you will have this kind of a question, sir, you are again and again using the acronym IPO. What do you mean by IPO? IPO stands for Initial Public Offering. IPO stands for Initial Public Offering. Means what? Until now, a particular company which was, let's say, a private company will list its shares, will sell its ownership in the form of shares in the stock market, and it will become a publicly traded company. Such a process is called as an initial public offering. For example, any company whose shares are available in a Bombay Stock Exchange is nothing but a publicly traded company, and it can get its stocks listed or shares listed only when it goes through a process which is called as initial public offering. Like I have already mentioned, in the first half of 2021 itself, there are more than 20 companies in India which have gone for IPO, the latest and the most famous being Zomato itself, and all of these particular companies put together have been able to raise more than 27,000 crore rupees as of now. So, please be very careful with respect to IPO, questions can be asked. I will come back to this, I will give you certain important points. Now, what is the basic idea here? Why is PFRDA chairman saying that we are going to allow the pension funds to invest in IPO henceforth? Now, the basic idea is, recent times more and more companies are going for an IPO, and based on the performance of these particular companies, the market price of the shares are increasing. So, the idea is pension funds will be allowed to invest in the IPO and subscribe and purchase the shares of these particular companies. And when these get listed and the performance of these particular companies will improve, market price of the shares will improve, the earnings of these particular pension funds obviously will start improving. In simple terms, in the market, many of these particular investors are gaining because of IPOs and the performance of these particular companies when their share gets listed in the stock market. So, PFRDA also wants to allow the pension funds to start making gains from this particular process. Now, go to this particular term, IPO, initial public offering. Let me give you certain very important ideas within this particular IPO. Whenever IPO is done, it essentially means what? A particular company which was earlier a private company will start trading its, will basically sell its ownership through shares in the market, and these particular shares will get listed in the stock market. But please understand, in recent times, if you have been following the discussion related to, let's say, Zomato, they basically stated oversubscription, undersubscription, these kinds of terms, share allotment, so on and so forth. Always remember this, whenever there is an IPO conducted, there are 3 types of investors. This is where I am expecting a question from UPSC in the prelims. So, whenever an IPO is conducted, there are 3 types of investors who will invest and try to purchase the shares in an IPO. One is called as a QIB, qualified institutional buyers. Is that okay? It is referred as qualified institutional buyers. And second one is non-institutional investors. What are non-institutional investors? Best example, high net worth individuals, HNI, high net worth individuals. And the third, where all of us right will basically fall, is retail investors. Is it okay? Retail investors. Now have a look at this. Whenever an IPO is done, can a particular company sell any amount of shares to any one of these particular investors? No. Please understand this. SEBI guidelines mandate that there are two situations. Follow this very carefully. First one, if a particular company which wants to go for an IPO has enjoyed profits in the last 3 consecutive years. Is it okay? I will repeat it, important. If there is any company which is getting listed, that is IPO is being done, in the last 3 consecutive years, if it has enjoyed profits, then whatever is the number of shares that they want to issue, they will have to allocate these particular shares in this particular proportion. 50% will have to be allocated to QIBs, 15% will have to be allocated to non-institutional investors, and the remaining 35% will have to be allocated to these particular retail investors. Is it okay? These kind of restrictions are imposed. And let me give you another statement also. If you are a retail investor and you have subscribed for certain number of lot of shares, what do you mean by lot of shares? Individual shares are not sold like this. There is always a group of shares. It is called as a lot of shares. Okay. So whenever you subscribe for a lot of share. So whenever you subscribe, is it guaranteed that you are going to get that amount of a lot of a share? Please remember the statement. No, there is no guarantee, because there are 2 more technical terms which are referred to as a oversubscription, undersubscription. Oversubscription means, imagine here is a company which wants to sell, let's say 10,000 lots, each lot containing let's say 10 shares. Now if if 10,000 lots are being sold by the company in the form of let's say IPO, but the demand because of the subscription is let's say for 13,000 lots, obviously everybody may not be allocated the lots of shares that he has subscribed for. So you can subscribe, right, but there is no guarantee, right? If there is a over subscription, there is no guarantee. So all these terms are very, very important. Please be very, very careful with respect to these kinds of questions which could be asked in the UPSC exam based on one, PFRDA, and the second one, the concept of an IPO. Now let me go to the next article here, RoDTEP, right? Now in the earlier videos we have already discussed what is the concept of a RoDTEP. But much more important, right, apart from RoDTEP in this particular article was another scheme, RoSCTL. And very recently, if you have been reading the newspaper, Government of India had put very, very big advertisements in many of these particular national diaries, stating that this particular scheme has been extended. Is it okay? The Government of India says that this particular scheme has been extended. Now, what is this particular scheme that I am referring to? RoSCTL. Please understand, this particular scheme stands for remission of state and central taxes and levies. Is it okay? I will repeat the expansion of the acronym, remission of state and central taxes and levies. Now what is the objective here? What is the concept? Understand the concept very carefully. Be it RoDTEP or RoSCTL, both of them will basically provide rebate of embedded taxes. This is a technical term. Now what do you mean by embedded taxes? Follow this. When you are a manufacturer, apart from paying some of the taxes, let's say in the form of import duties, in the form of a GST, excise, etc., you are also going to pay some other taxes which are not rebated, which are not given back. Because any tax a manufacturer pays has to be given back to him. That is the idea of a input tax credit. If it is not rebated, manufacturer essentially what he will do? He will transfer it in the form of market prices. That is, if these particular input taxes are not given back to him, right, he will simply transfer it when he decides what should be the market price. Now have a look at this. Under these particular embedded taxes, examples are the duties that these particular manufacturers will pay on, let's say, fuels that are used for transportation. Some of the duties that they pay for consumption of electricity, so on and so forth. These kinds of duties or charges or taxes which are paid by the manufacturer are not refunded by the government. So what will the manufacturer do? When he decides the market price or the selling price, he will simply add these charges in the market price. Now what will be the problem with this? The problem is when he will add it to market prices, the market price of the goods will increase. For example, there are textile exports done from India. There are right, apparel exports done from India. Is it okay? So these kinds of exports, don't you think in the international market they will become more costlier and less competitive? So what Government of India basically did was, in order to provide certain relief to these kinds of exporters, that is the apparel exporters, right, the made-up sector, so on and so forth, to provide certain relief to these kinds of exporters, government, right, that is Ministry of Textiles, in 2016 introduced a scheme called as ROSL, rebate of state levies, right. It was initially only state levies, same concept, embedded taxes will be rebated to the exporters so that the textiles will become very competitive in the international market. Now in 2019, follow this, in 2019 the same scheme was revamped and named ROSCTL, that is we will not only give a rebate of the state levies or taxes, we will also provide a rebate for the embedded taxes which are at the central level. And it was stated in the beginning that in a couple of the months itself, this will be merged with RoDTEP. Is it okay? This will be basically be merged with another scheme, RoDTEP. Now Government of India says, no, we are not going to merge this particular scheme under RoDTEP. It is going to be continued for 3 more years as a separate scheme itself. Is it okay? This will be continued as a separate scheme. Now what is the advantage with this particular expansion or extension of a particular scheme? Understand this, as such under RoDTEP already there are various concerns for the exporters, right. What is the concern? You are an exporter, you need to get rebates under RoDTEP scheme, that is remission of duties and tariffs on exports of products. Government of India so far has not notified the rates at which the rebates will be provided, first one. Second one, because government has not notified the rates of rebates, this has created certain uncertainty amongst the exporters. Third one, if you bring more sectors under RoDTEP and allocate right limited amount of a funding for this particular scheme, don't you think that will create more competition? That will basically ensure, or it will take to a situation wherein amount of refunds or amount of rebate or the allocation for this particular scheme will not be sufficient. So very recently Government of India stated, no, we are not going to merge this particular scheme under RoDTEP. This is going to be run separately itself, and this is expected to provide a certain relief to the exporters who are going to be covered under RoDTEP. Now next important point, all the textiles are not covered under this particular scheme. Is it okay? All the textiles are not covered under this particular scheme. Apparel is there, made-ups is there, garments is there. That is, these 3 are covered. Now, apart from this, any other textiles, if they want to get a rebate, they can be covered under RoDTEP. And these 3, that is apparels, garments as well as made-ups, which are already covered under RoSCTL, these exporters will not be getting any rebate under RoDTEP. Done. This is another very important change or important announcement that has been done by the Government of India. So this is a discussion provided here. Based on this, I have given a question here. First one, consider the following statements regarding RoSCTL. Scheme was notified by the Ministry of Textiles and implemented by the Department of Revenue. Statement is correct. I have only given the first part of the statement. Yes, scheme was actually announced by the Ministry of Textiles, but notifying the rate, providing the scripts under this, right, everything will be done by the Department of Revenue. Under this, the embedded taxes are rebated. I have already discussed what is the meaning of embedded taxes, and yes, embedded taxes are actually rebated under this particular scheme. Both the statements are true. Right option is option C, both 1 and 2. Let's go to the next article, PSB Loan Write-off. Right, have a look at the title of the article. PSB Loan Write-offs, twice the government's capital infusion in 7 years. Now, what is this particular idea? Let's try and understand first. Right, understand this very carefully. Here is a particular bank. It has given multiple loans to different borrowers in the market. Many of the loans will be recollected, but there are certain number of loans, right, where there is no recollection. Basically, what they will do, they will classify these particular loans where recollection is not happening for a certain period of time as NPAs, non-performing assets. Now, the story will start. Once you are classified as a non-performing asset, understand this, for the first 12 months, that is for the first 12 months after being classified as an NPA, you are classified as a substandard NPA. Remember the classification, this could be asked in UPSC prelims. Okay? For the first 12 months after being classified as an NPA, within NPA there is another classification, substandard NPA. Now, this particular NPA, it is remaining NPA for more than 12 months, right? Then basically, that is when a situation arises when an account is NPA for more than 12 months, we will simply call this as a doubtful NPA. Is it okay? We will call this as a doubtful NPA. And an account remains a doubtful NPA for a period of 3 years. So, totally understand this? Initially substandard 1 year and doubtful 3 years. So, totally how many years? 4 years. Now, once an account remains an NPA for a period of 4 years, right, 1 plus 3, then basically it is classified as a loss making NPA or loss making asset, which essentially means what? The bank has tried all the avenues, all the measures that it could take to recover this particular loan, but it is not possible now. So, what does the bank do? Bank will have a balance sheet. Is it okay? Banks will have a balance sheet. Right, in the balance sheet basically there are two representations, assets as well as liabilities, and always remember this, deposits collected by a bank are kept on the liability side and the loans issued by the bank are kept on the asset side. So, understand this, these particular loans despite being categorized or classified as an NPA for a period up to 4 years, these are kept on the asset side itself, but after 4 years, generally after 4 years what the bank says is, there is no way I can recover this particular asset or a loan. So, what I will do? I will simply write off this particular NPA. Write off means henceforth, this particular loan will not be mentioned in the balance sheet. That is the meaning of a write off. Please be very, very careful. Write off does not mean you are going to waive off a loan. Please do not misunderstand between both these particular terms. Write off means, imagine you are a bank, you have given me a loan, I have defaulted, it has been more than 4 years now, you will stop writing this particular loan in your balance sheet, that is it. But will you try to recover the loan from me? Definitely yes. The legal process or legal avenues which are there with you, you will continue with those particular processes, you will try to recover this particular loan, but you will not write the loan in your balance sheet. Now, this particular process is called as a write-off, and if you simply say, sir, right, you teach economy, so you do not pay loan, that is called as a waiver. Is it okay? Waiver means debt is cancelled, whereas in case of a write-off, debt is not cancelled, recovery will continue, but writing the loans in the balance sheet will not be done. Now, some of you will be worried, you will simply say, sir, if you are going to collect it, why you do not write it in the balance sheet? There is a particular reason for this. Follow this very carefully. Whenever any bank will give a loan, it has to keep aside certain amount of money. Is it okay? It has to maintain certain capital or provisioning reserves. There is a term called as provisioning norms. Right? Logic is, there could be a situation where this particular loan might not come back. And especially when, right, these particular loans will become an NPA, RBI says that you should make a provisioning of 100%. Means, if there is an outstanding debt of, let us say, 1 crore rupees, banks should also make a provision, keep aside 1 crore rupees. because they may not be able to collect this particular 1 crore rupees. So have a look at this. When banks will simply write off these particular loans from the balance sheet, it will free certain capital to the banks. The amount of provisions that they had done, now they don't need to keep these particular provisions because the loan is not mentioned in the balance sheet. That is the first one. Second, when they write off these particular loans, their balance sheets will look much better. Again, the balance sheet looks better. That doesn't mean that right, there is no issue of NPAs. Third point, have a look at this very carefully. Government of India, in order to provide certain relief to these particular public sector banks, has been infusing capital into these particular banks. That is, the government is infusing capital so that the burden of NPAs which is affecting their performance will be reduced. Now, very recently the discussion has been that the amount of write-offs which have been done by these particular PSBs is more than twice the amount of the recapitalization which has been done by the government of India. Now, what is the meaning of this, right? How do you apply this in UPSC, right? Remember this particular statement. Generally, we say that the trend related questions are asked in UPSC. If I give you a simple statement, follow the statement here. In the last 5 years, NPAs in the banking sector have kept on increasing. If I give you this statement, please be very, very careful. Statement is wrong. Why? The amount of NPAs in the banking sector actually started increasing post 2012 in India, and it hit a peak in the year 2018. Right? 2018 was the year when the NPAs were the highest in the Indian banking sector, and post that the NPAs have started actually coming down. As per RBI report in 2018, the total NPAs in the banking sector were more than 10.3 lakh crore rupees. And as per the latest report, it is somewhere in the range of 8.3 lakh crore rupees. Now, looking at this particular data, don't become happy that NPAs are actually come down. No, please understand this. NPAs can come down because of two reasons. Right? Please be very, very careful. NPAs can come down because of two reasons. One, these particular NPAs, imagine these are substandard, but the banking sector is unable to revive this particular loan or basically recollect the loan, and the asset becomes let's say a standard asset. So NPAs will come down, right? Or else they are providing, let's say, a loan restructuring. They are offering a loan restructure to these particular borrowers whose assets have become NPAs. Now, because there is a loan restructure, the borrower has started repaying, so the NPAs will become standard assets. Right? This is one methodology through which NPAs will come down. Second methodology, banks will write off these particular NPAs, and when they write off NPAs, because these are not mentioned in the balance sheet, obviously NPAs will be reduced. And RBI's recent report essentially makes the same point. It says that a substantial amount of a reduction in the NPAs that you can see in the last 2 years is because of a write-off itself. Now, beyond this, what is the point that you need to infer here? Right? As such, when Government of India infuses capital, right, through the process of capitalization into the PSBs, there is a lot of criticism with respect to that decision. Various experts say that, why are you taking good money, that is a taxpayer's money, and you are giving it to a public sector bank? Because the taxpayer did not ask the banks to give loans to a bad borrower. It is the decision of the public sector bank, right, because of which they are incurring NPAs. So why should you use good money behind a bad decision making? So there is always the pro as well as a con that is discussed with respect to concept of the recapitalization done by the Government of India. And in that particular discussion, now the data shows that in the last 7 years, the write-offs done by these particular banks is almost more than twice compared to the amount of capitalization infused by the Government of India into this. And what about these particular write-offs, right? What has been the recovery? Remember this also. As per RBI report, it says that these particular write-offs which have been done, I said that write-off means what? In the balance sheet, we will not write this particular loan, but at the branch level, the recovery process will continue. So how much has been recovered? As per RBI report, between 2001 to, that is financial year 2 to financial year 13 and 14, only around 23% of loans written off have been recovered. It simply means, imagine between these two time periods, a particular bank has written off 100 rupee worth of a loan. The recovery is how much? Just 23 rupee out of this. And also remember this, any recovery that is done, the bank will simply add it under the balance sheet under other income sources. Okay. Now, after this, between 14 and 18, between 14 and 18, that is a much dismal picture. Only 14% recovery has actually taken place, right? 14% recovery of all the loans which have been written off, right? And believe me, the number of loans which have been written off in the recent times itself is very, very high. For example, in the last 4 years, every year the bank's PSBs collectively have written off more than 1 lakh crore worth of these particular NPAs annually. So, the amount of loans which have been written off in the last couple of years is very, very high. Recovery is very, very poor. So, that is what is being discussed in this particular article. Next article, inflation index is supposed to be reset. Now, when they say inflation index is supposed to be reset, what inflation index are they referring to? They are not talking about a CPI, please understand, they are not talking about CPI combined, which is nothing but a retail inflation. They are simply talking about CPI agriculture labor, CPI AL. Now, if you have been reading the basics of inflation, you will know that we measure CPI combined, which is referred as a retail inflation. In addition to this, there are other types of indices, right, that is within CPI itself. One is a CPI IW, industrial workers, right, which was there recently in the newspaper because Government of India has announced a hike in the dearness allowance and dearness relief of the central government employees, right, and CPI IW is used to revise DA and DR, remember that, right. In addition to this particular CPI IW, you also have a CPI UNME, urban non-manual employees, and you also have a CPI AL, agriculture labor. Now, CPI AL, the base year is very, very old, in fact, right, more than 2.5 decades now. So, Government of India says we want to revise this particular CPI AL and we want to have a new base year, that is 2018 and 2019. Now, question will arise, so then what was the earlier base year? Earlier CPI AL had a base year of 1986 and 87. And out of this particular basket, which is used for the calculation of CPI AL, more than 66% weightage was actually provided for the food and beverages section itself. Whereas, if you see as per CPI combined, which is a retail inflation, food and beverages has a 45.8% weightages as of now. In essence, what I am trying to say is the consumption patterns have changed, right. What kind of goods and services are consumed today are completely different compared to the base year of 85 and 86, or for that matter 86 and 87 in case of a CPI AL. And why this revision is very, very important? Also remember that CPI AL is generally used to revise Manrega wages, Mahatma Gandhi National Rural Employment Guarantee Scheme or Guarantee Act, even the Anganwadi workers wages, right, that is also revised based on CPI AL only, right. So, there are various wages at rural level which are basically revised based on what is this particular CPI AL. So, now Government of India says we are looking at revising the base year and we are also looking at changing the composition of the basket of commodities covered under the CPI AL. And it is likely, based on the article provided here, it is likely that by September this is going to happen, right. So, if that happens, please update the information. This is one of the potential questions in the UPSC exam. Done. Now, let us go to the next article, Insolvency and Bankruptcy Code. Under this, right, one point is being discussed here, we will focus on that only. Now, understand this, imagine a particular situation, creditors have given loan to a particular company, is it okay, right? Creditors, I am talking about, let us say, financial creditors, they have given loan to a particular company, the company has defaulted, he is not repaying this particular loan. What is the process here? The creditors will have to approach NCLT, because under Insolvency and Bankruptcy Code, which is the adjudicating authority, National Company Law Tribunal, and file an application. Is it okay? They will have to file an application here. Now, NCLT within next 14 days, that is as per IBC, right, the guidelines as such, within next 14 days will have to either accept and admit this particular case or else reject this particular case, right. Why this particular time period is given? The time period is given, right, for NCLT to look at the merit of the case and quickly decide, because 14 days is a very shorter time period, quickly decide whether to admit or reject this particular case. But as per the recent survey, it shows that this particular NCLT is not taking 14 days, rather on an average it is taking 133 days. Is it okay? On an average it is taking 133 days to either admit or reject this particular application for insolvency. Now what is the problem here, right? What is the problem? If there is a delay, what is the problem? First and foremost, IBC is known for what? The limited time period for resolving these particular cases. That is, insolvency resolution should be done within a limited time period. What is the time period? 330 days. But the first stage itself, you are taking 133 days on an average. Don't you think the whole process will be delayed? First. Second one, always remember this, until and unless an insolvency resolution right process is admitted, the resolution professional is not appointed. That is, insolvency professional is not appointed. Right? I will use a short form here, IP. Once the case is admitted, right, the NCLT along with the committee of creditors basically decide who should be the insolvency professional. Now the problem is, if it takes 133 days to admit this particular case, during that particular period, the owners or the promoters of the company can simply divest away or sell away the assets of this particular company. And don't you think that will affect the recovery of the creditors who will basically who are taking this particular company to insolvency resolution? So there are certain problems with this particular delay. Now question is, why is this particular delay happening in the first place? Two reasons. One, the adjudicating authority is getting into merit of the case. It is getting into the merit of whether the repayment has been done, yes, no, what is the process, so on and so forth. The authority is not supposed to get into the merit, it is simply right supposed to accept or reject the application. There is a delay. And second, right, which is much more structural in nature, the number of NCLT benches that we have are not sufficient in terms of handling these particular cases. And invariably, because of these two reasons, the cases are getting delayed like this. Now what has the Government of India proposed here? Follow this very carefully. Whenever the creditors are there are two types of creditors. One is called as a financial creditor and the second one is called as an operational creditor. Okay. Now Government of India says that if it is an insolvency case which is applied by a financial creditor, we want to make it automatic. That is, if a financial creditor files or applies for insolvency resolution for a particular company, they don't have to wait for NCLT to accept this particular case. Automatically it will be admitted under NCLT. That is the point which is mentioned in this particular article. Beyond this, certain data is given, you don't have to be worried about the data here. Done? Next article, MSME data bank. Now please understand, every one of us knows that MSMEs are very, very important for Indian economy, right? With their sheer number, employment, export, contribution to manufacturing and services, etc. MSMEs are very, very important. Nobody can deny that. But because the government doesn't have the data set of how many MSMEs are there, in which sector, where they are located, what is their need, it is becoming very difficult for the government to provide the needed services or the required services to these particular MSMEs. For example, a ministry such as Ministry of Rural Development has various schemes under which they are basically promoting MSMEs in the rural part of India. But because there is no consolidated data as to what type of MSMEs are there, where they are located, right, what kind of goods or services they are manufacturing, etc., 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 it is becoming very difficult for the government to direct these particular schemes and provide needed services to these particular MSMEs. So what Government of India is trying to do now is, they are trying to plan, or they are basically planning to create a data bank of all of these particular smaller units of MSMEs. Right? The article basically says only smaller units, but the headline says MSME. Right? Just wait and see when the data set will be published. So understand this, Government of India, right, has basically asked all these particular ministries whether they can simply use Udyam registration number. Is it okay? Last week, if I remember correctly, or a week before that, we have discussed the concept of Udyam registration, right? So under that, whenever an MSME is registered, a number is given, right, as an identification for these particular MSME. So Government of India is basically saying that, why don't we use this particular registration number or identification number and right, basically ensure that all the ministries will be using the same registration number. It will become an identification for these particular MSMEs. And the objective here is, if it is used, right, if it in fact is implemented, then all the ministries do not have to run to collect the data for MSME. They can simply get this particular data from this particular portal itself, and that is what is being proposed here, right, by the central government. Beyond this, nothing is important, do not worry here. And next, two reports have been published very recently. Now, if you have seen the UPSC prelims paper very carefully, generally the tendency of UPSC is, he is going to ask you on reports, and the tendency of UPSC is either he will give you the title of report, ask you who has published it, or vice versa, right. That is, he is going to give the name of the authority or the institution and ask you which of the following reports are published by this particular institution. So, in the last 1 week, there are two reports which were there in the discussion. So, I have taken these particular two reports here. First one, the US State Department has published a report, 2021 Investment Climate Statement India, right. This is the title of report. Okay, I will repeat the title here, 2021 Investment Climate Statements India, right. Under this particular report, what it has mentioned? It has basically mentioned that India has become a challenging place to conduct business, and there are reasons, I will tell you, right. It says that Indian economy or Indian economic situation as such, it is very challenging for these particular businesses to conduct the business here. What are the reasons? What reasons has it cited to prove its point? First one, it says that the government of India has introduced certain procurement norms, and these particular procurement norms are discouraging the multinational corporations, are encouraging, or it is becoming very difficult for the multinational corporations to sell in India because of these particular procurement norms. Second one, in the recent times, the government of India has increased the barriers for the trade. For example, the tariffs have been increased by the government of India. That is what it states. Third one, the standards which are used by the government are not international standards, right. They have their own standards, so they are not meeting the international standard requirements. And the fourth one, within barriers, there is a concept called as phytosanitary measures. These particular phytosanitary measures which are implemented in case of India for imports like this, or even for promotion of exports, these do not have any kind of a scientific data, scientific backing as such. So, these are some of the reasons which have been cited by this particular report, and to prove their point that India has remained a particular place of a business where it is very difficult to conduct the business for these particular companies. Now, can UPSC ask these kind of questions? In mains, yes. In prelims, you can expect a question, right. They will simply give the title and ask which following authority has published this. Okay. One more report. This particular report is published by United Nations Global Survey on Digital and Sustainable Trade Facilitation. Okay. Now, this is a biannual report. Remember this. This is a biannual report. What is the meaning of biannual? Published once every 2 years. Under this, basically multiple parameters have been chosen. You do not have to mug up these parameters because there are more than 50 parameters. And on these particular parameters, they have ranked different countries, and or they have evaluated the performance of different countries, and the report says that India's performance has actually improved over a period of time, because it has implemented various reforms to promote, let's say, digital payment of taxes, digital filing of these particular taxes, digital filing of various paperwork documentation, etc. And this is basically what has been provided in this particular article. Beyond this, right, you do not have to read what else or know everything that is given with respect to this particular report as such. Done. So, these are some of the articles. Now, before I wind up the discussion, there were two very important discussions of the articles which were published in the PIB, right. I hope you remember this. We have started this particular initiative where we are taking certain important articles from the PIB as such. Now, I found two important, very interesting articles in the PIB. One, IFCO, right. I hope you remember this, or you know the name of this particular cooperative, IFCO. IFCO has been allowed to produce nano urea, liquid nano urea for a period of 3 years in India. Now, this is very, very interesting. Please be very careful about this. Now, what is this particular idea of a nano urea? Generally, when you talk about agriculture sector, one of the issues with relation to agriculture sector is fertilizer consumption is very high in India. And within fertilizer consumption, again and again we go back to the talk of urea consumption, right? Substantial amount of a subsidy given by the government, substantial amount of a consumption of fertilizer, all of them are associated with urea itself. And when you consume more and more of urea, there are certain negative implications related to that. For example, have a look at this. This particular bag of urea, which is generally sold in a size of 45 kgs, costs somewhere around 267 rupees in case of India after subsidy provided by the government. But the problem is the farmers apply too much of a urea in India, which is basically main source of a nitrogen, as a result of which there are two processes, right. As a result of this, the availability of these particular nitrogenous bases in, let's say, nitrogen or nitrous oxide, right, which is a pollutant, is pushed into atmosphere because of that. And because of the leaching process, right, these particular nitrogenous based compounds get added to water table also. So there are certain concerns related to excessive consumption of urea in the agriculture sector. And to address this, very recently, for the first time in the world, IFFCO has produced nano urea, which is in a liquid form, and it is selling it in a half a liter or 500 ml bottles as such. Now, what is the beauty of this particular nano liquid urea or nano urea liquid as such? Understand this, it is said that the absorption capacity of this particular urea is much higher. Now, what do you mean by absorption capacity? Generally, in case of the normal urea, that is urea pellets as such, the absorption which is done is 30 to 50% of urea that is applied, around 30 to 50% of the urea that is applied. Whereas, in case of a nano urea, which is basically urea which is present in very small particle, ultra small size of particles, right. You can guess that by the name nano urea itself. So these particular very small size particles, the absorption in these particular cases is said to be around 80%, around 80%. So absorption by the plants is very high, right. And in addition to this, it is also said that the fertility of the soil or overall productivity is expected to be increased, the consumption of urea is expected to be reduced, and when consumption of urea comes down, obviously the total expenditure incurred by the farmer is also expected to increase. In addition to this, government also says that because these are sold, right, in these particular bottles, 500 ml bottles, and please understand, as per the government document itself, this particular 500 ml one bottle can simply replace consumption of one bag of urea. Is it okay? And one bag of urea, earlier I have mentioned this, right, weighs how much? 45 kgs. So this particular single bottle of 500 ml nano urea liquid can simply replace right, one bag of urea consumption in the agriculture sector. So what is the advantage? Storage will be much easier, transportation will be much easier. In terms of a cost, as of now government says this will cost somewhere around 240 rupees per 500 ml. And the one bag of urea 45 kgs is costing around 267 rupees. So in terms of burden on the farmer is also expected to be much lesser, right. That is the reason Government of India has stated or has allowed IFFCO to produce a nano urea in a liquid form for a period of 3 years in India now. Done, this is one. And second one, Stand Up India scheme has been extended up to financial year 25. Now the question is, what is a Stand Up India scheme? Please understand this. 5 years ago, right, 2016, Government of India announced Startup India and Stand Up India. Is it okay? I'll repeat it. Startup India, Stand Up India. Startup India is a different scheme. Stand Up India is a different scheme. And very recently, Government of India has extended this up to 2025. Now, why did I pick this particular article? For two reasons. One, because it is there in the current affairs, and second, because it was announced in 2016, right, in the month of April, this particular scheme has completed 5 years, right. That is also very important. So have a look at this. Under this particular Stand Up India scheme, the scheduled commercial banks, remember this, it is a run in scheduled commercial banks. The scheduled commercial banks so far have issued more than 1.1 lakh loans, and more than 26,000 crore worth of loans have been issued. Now what is this loans I am speaking of? Under this particular Stand Up India scheme, greenfield projects are promoted. Remember this also. greenfield projects are promoted means what? New companies which are set up will be provided loans under this particular Stand Up India scheme. How much? 10 lakh to 1 crore rupees. 10 lakh to 1 crore rupees. That is the amount of a loan that will be provided under this particular scheme as such. And when I say loans, please be very, very careful. The term is very, very tricky here. These loans are composite loans, and UPSC can use this also in the statement. These loans are not just term loans. These loans are not just working capital loans. These are composite loans. Now the question is, what is a composite loan? Composite loan has a component of a term loan as well as a working capital loan, right? So that is a mixture of both of these will be present in these kinds of loans, which is called as a composite loan. And Government of India says we will extend this particular scheme up to 2025 now. Done? So based on this particular discussion, I have given a question here. Consider the following statements regarding Stand Up India. Margin requirements applicable to avail the loan is 25%, right? What is the meaning of this, right? Follow this very carefully. Until very recently, margin requirement was in fact, yes, 25%, meaning what? Imagine I am, right? I will make one more point here. Under this particular scheme, the loans will be provided either to SC or ST entrepreneurs and women entrepreneurs. I forgot to tell you this particular point, but please remember this. The loans under this is not provided to everyone. SC or ST entrepreneurs and women entrepreneurs, that is every branch of a scheduled commercial bank will have at least one loan which is issued to either SC or ST entrepreneur, again greenfield project, and right, and woman entrepreneur, right? Done. So have a look at this. If one entrepreneur, let's say SC or ST or doesn't matter, woman entrepreneur, they want to set up a particular company, a greenfield project, and if they require let's say an arbitrary number, right, let's say 1 crore rupees, right? If they require right 1 crore rupees, then the government under this particular scheme says, I will not provide the full amount of a loan, right? What is the cost of the project here? 1 crore rupees. I will not give full amount right under the Stand Up India, although it is possible because the value of the maximum loan provided is how much? 1 crore rupees, but I will not give it. I want you to put some money from your pocket. That is, remember this, earlier it was 25%, and the amount that the entrepreneur is expected to invest or put into the project like this, it is called as a margin requirement. Either he can put it from his pocket only, or he can avail this from any other schemes of the government, but essentially it has to come from right him, right, completely will not be provided under this particular scheme only. So earlier the margin requirement was 25%, but in the recent budget for the current financial year, Government of India has actually reduced this to 15%. Margin requirements has been reduced to 15%. So the first statement is wrong. Again, what do you mean by margin requirement here? 1 crore, 25% means 25 lakh has to come from the entrepreneur. Now it has been reduced to 15%, which essentially translates into 15 lakh rupees for 1 crore cost of the project. Second statement, loans are provided for both greenfield and a brownfield project. Statement is wrong, only greenfield projects. So right option is option D, neither one nor two. So these are the various articles for this particular time period, which are very, very important both for UPSC prelims as well as mains, as well as the questions related to these particular articles. Now before I wind up, I just want to make a gentle reminder here. If you like our initiative, please hit the like button and provide your valuable inputs in the comment section. And if you have not yet subscribed to our channel, kindly subscribe to this. Thank you. Have a good day.